Hello everyone, hope you are all having a great week. My name is Drew, the host of Never Behind, wanting to share insights from well-known investors or investors that have been in the market for a long time with plenty of experience so that they may provide insights of the market that may help you with your personal investments and never be behind the trend. Today I wanted to share two stocks that Cathie Wood has shared during her recent interview that she thinks may have the potential to grow as much as Tesla. Now I do want to make it clear that just because Cathie Wood is bullish on a stock, that doesn't mean that the stock will go up, neither will it go 10x like Tesla in 5 to 10 years. It is purely Cathie Wood's thought based on her research and is sharing her insights and visions on these stocks. So with that, let's see what the two stocks Cathie is bullish on. Now before I get into the two stocks that Cathie Wood mentioned during her recent interview, I wanted to share that Moomoo is having a great promotion giving out 16 free stocks including either Tesla or a Google stock. If you open an account and deposit $100, you get 5 stocks. If you deposit $1,000 and keep it for 60 days, you get a total of 15 free stocks, and if you deposit $5,000 and keep it for 60 days, you will get 15 free stocks plus either Google or a Tesla stock. So if you want to receive a potential of 16 free stocks, make sure you click the link in the description below. Now, the first stock that Cathie mentioned that she was bullish on during this interview was the leader in the streaming industry with the largest platform, Roku, ticker symbol ROKU. Now, in the past, we had a generation where television was being replaced with cable TV, and now we are in the era where cable TV is being replaced with streaming contents. And no longer do we see people downloading contents, but all go to platforms that are streaming videos. Now, Roku is a company that has its own streaming channel, Roku channel, and also provides Netflix, Disney Plus, Hulu TV, YouTube TV, and so on in one place. So as long as streaming is a mega trend that is here to stay, I agree that Roku has huge growth potentials. I also am personally interested in Roku, but based on the 10Q where they have negative net income and also negative cash flow from operations, this stock is a bit too risky for me to invest at this point, but I'm keeping a close eye on the stock and waiting to see if they can turn the negative net income and cash flow to a positive number in their future earning calls. I do understand that it is common for most growth stocks to have negative net income and cash flow with high risk, but at the same time might be a great opportunity with potential upsides. Now, whether you invest in a stock or not depends 100% on your risk tolerance level, so make sure you do your own research before investing in any company. Now, let's see what Cathie had to say about Roku and why she is so bullish on this company.
It is the TV operating system. So you'll remember in the day, cable dominated, right? But it was very much regional. Well, this is the TV operating system for the US. This is not regional. And many people get confused when they hear Roku. They think hardware, which not very attractive business, tends to be commoditized. That's not what Roku is. Or they think of competition, Netflix, Disney Plus, Hulu, so forth. And that's where the big error is. Roku is hosting all of them. It is the platform hosting them, and it is growing in market share yearly. The advertising environment has obfuscated what's going on here. Most of its revenue is advertising based, and advertising is in a recession. But if you take a look at what happens during recessions, the new way of doing things gains massive share. And we saw that last year, and even in the last quarter. I'll use the last quarter, those numbers are fresher in my mind. Roku's revenue surprised on the upside, up 11% in a scatter market, which is its primary advertising market, sort of the spot market, that was down quite significantly in the teens, I think. And so it's taking massive share, and that gives us increased confidence. Nonetheless, because many I'll say old-time media analysts are very focused on the cable companies and the broadcasting companies and what they've grown up with. This is highly disruptive to them. And this is what I mean by truly disruptive innovation and the old guard. It's not just the old companies. It's, and I'm not calling the analysts old, but the analysts who grew up on these old companies and are used to those models and to that DNA are finding it difficult, especially given what what they hear from those companies, finding it difficult to migrate to this new world. They're beginning to migrate because, again, truth wins out, and the share gains are undeniable now.
I totally agree on what Cathie said during her interview, but again, I'm not comfortable investing in a company with negative income and negative cash flows in a market like the one we are in. So although I am still interested in this company, I am planning to wait to see the upcoming earnings and keeping an eye on to see if the negative numbers can turn around. Okay, now let's get into the next stock that Cathie Wood is bullish on and thinks has great growth potentials.
Not perfect, but we have Democrats and Republicans together on these bills coming through, bills around stable coins and market structure and so forth. This is a new asset class, and this is what we need to happen. It's what happened, believe it or not, with derivatives. And there were court cases around derivatives that went to the Supreme Court. And we do believe Coinbase's suit with the SEC, or the SEC's suit against Coinbase, will go on appeal to the Supreme Court ultimately. And when you think about crypto and the internet financial system, let's call it that instead of DeFi or decentralized finance, what that is telling us is the internet was built out without that financial system. Nobody knew commerce or financial services were going to take place on the internet. In fact, no one would put their credit card on the internet, if you'll remember. Now, of course, that is not true. And so this is the layer of the internet that the engineers skipped in the early days. And now we're just introducing it. And it's going to collapse the cost of financial transactions. If you look at financial transactions today, to go from merchant to consumer, there are 7 intermediate steps. All of those are toll takers. And this could collapse to peer-to-peer or just one intermediary, like a digital wallet. But it's going to take a lot of costs out of the system, which is what technology does.
So Coinbase is a platform or a brokerage type service where you could buy and sell cryptocurrencies like we trade stocks on either E-Trade and Fidelity. I think Cathie had a great point where she mentioned that cryptocurrencies and stable coins are a new asset class and the majority of people are uncomfortable, including the SEC. So there will be a lot of hurdles even if cryptocurrencies do survive and become mainstream. Also, as other cryptocurrency platforms such as Binance, KuCoin, Bittrex are having issues and losing market share, I think this is a benefit for Coinbase, giving them a stronger moat. Another part that I thought was interesting is that when internet was first introduced to the world, we never thought that we would be buying products online, nor did we think people would be comfortable registering their credit cards online as well. Well, we now know that buying products online and registering our credit cards are natural these days. Cathie Wood was saying that when e-commerce came along, we made several steps that collected transaction fees, which cost the customers a lot of money. Now with cryptocurrencies, we will be taking away this middleman or middle processes, reducing a huge amount of these fees, which will benefit the customers and may become mainstream. And she also mentioned that one of the major goals for technical innovation is reducing the cost for the customers, and in the financial sector, this huge drop of transaction fees may happen through DeFi. Now, will we see cryptocurrencies going mainstream in 5 or 10 years? I think nobody has the answer to this question, but we will have to wait and see how this sector develops. But if cryptocurrencies were to survive in 5 to 10 years, I personally think that Coinbase is a stock with a very strong moat and might be a stock that you may want to keep an eye on. But again, this is not financial advice and just sharing Cathie Wood's insights on the stocks that she's very bullish on. So with that, I wanted to thank you for watching this video and hope to see you on the next episode.